And welcome back, everybody. It is the new year, and it's Ted here with some of your favorite technical analysis coming up with some buys and wicks, and what's been causing this huge pullback that we've been seeing in the crypto market. Um, I'm not sure I have the answers, but we'll get into some technicals and we'll see if we can answer it with some smart money perspective. If you don't know what smart money is, if you haven't seen my videos, smart money is basically the people that have all the money that can control the market. It's the opposite of whatever you've been taught. Generally, whatever you've been taught is, if you've had a double bottom or a double top or you have a trend line or something like that, typically, you trade off of those because that is the safest spot to trade according to smart money, or according to retail trading. What people don't realize is that retail trading was primarily invented by the bankers to teach you how to trade to where you can win about 30% of the time, and then you'll lose most of the rest of the time. So that way they win the rest of the time, and they get to keep their secrets to themselves. I've been going through a mentorship that has been showing me a lot about smart money and about showing me a lot of how the bankers think and how they trade. So, and I can try to do my best to explain what has been happening here. And if you have seen my videos and you do like what I do me a favor, hit that like button, hit that subscribe button. That way you can get more from me, and hopefully I can help you out. That way you're not getting caught with your pants down and getting ripped off by these freaking bankers. All right, so we should forge ahead, I think, and just go ahead and take a look and see what's going on. So I'll go over the main cryptos today, and maybe some others, but I'll try to keep it as short as possible. That way nobody loses their their focus. All right, so what I'm on right now, let's see here. I think I'm on Ethereum. Yeah, so Ethereum. So we have come in the last couple. I mean, look at this 3 days. I'm on the daily right now. So in these last 3 days, we have just dropped dramatically. Now, right now we are in a daily fair value gap. What does that mean? That means over here you can see, it's probably just above my head, you have a green candle, another green candle, and another green candle. Well, these two green candles here did not touch. They did not pull back and balance. So you have a wide open area where there leaves an imbalance. Now, price likes to come back to these imbalances. So that's where it's at right now. We had an imbalance before, but it already had been filled. And that was this one right here, this daily fair value gap. And I believe there's another one up here. Yes, so there's 3 daily fair value gaps that have been filled. Boom, came back down, filled this one. Looks like it was trying to pull back up. Hit a bear shorter block, went back down, pull back up to the top of that fair value gap again if I was to extend this out. And then boom, just dropped out again. So it looks like it's filled all the fair value gaps that it has, and now we are in the daily. And now we're going to see if it's going to, I'm watching this one closely to see if it's even going to drop further, because below that we do have a daily breaker. Now, what is a breaker? Now, a breaker is when you have a low, high, lower low situation. So you can see here with this formation back in May, right? You have this low area, you pull up to the high, and then it drops again to make a lower low. Now the last up candle, which is that green candle right here, I don't know if you can see it, but that green candle right there, that is going to be your daily breaker. So if anything was to come, as you can see right here, look, it shot up right to the top of that breaker, pulled back, and then stalled for a second, and then went right back up through it. So then now, anytime it was to come back to that is going to act as support. That breaker is going to act as support, which it did. and I'm happy that it did. And so since it acted as support, it moved on from there. And so now if we take a look at this, and I don't think we're gonna get back to this break here. I think we are finally back at the bottom. I think now that we are at this fair value gap, what we could see is we could see the filling of this fair value gap. Oops, I just moved that. We could see this fair value gap get filled, but I don't think that's likely. If we do throw a Fibonacci on here, and I'm very much a Fibonacci person, and what I like to do is I like to go with a last low that beat the next high. So it looks like these were close to being equal, but I think if we were to get down to like the 4 hour or something like that, this would probably have a close above this one. So I would go to this guy right here. Nah, we'll redo that, but it's okay. Here to here. Maybe that is the lowest it gets. Well, where that last red candle is, basically, your last pullback. So here's the red candle here. So you pull this to the red candle all the way up. So you have your bullish order block, which would be your last two down red candles here, even though this is FVG weekly, which I just accidentally moved. It's in the way. What I can do is I can move that text. We can go to center. There we go. Get it out of the way. And so these two down candles here are going to be your bullish order block. And what does it do? Boom, runs right into that bullish order block. And now we finally start seeing the retracement off of that. So I think right now we're in a good spot with ETH. To be a little bit more bullish, it could pull up to the top of, the daily here, the daily before, and that could act as some kind of short time resistance to where it could pull up, hit it, fall back down, try to fill in the rest of this fair value gap, and then move on. But since considering it's went about halfway through the fair value gap, which is what I usually like to look for to see if it's gone about halfway through, because that'll give you a good clue as if it's going to move on or not. It's went more than halfway through, so which means the imbalance is not technically taken care of, but at least the imbalance has been entered, and it is starting to balance now. So that's what price looks for in smart money. It looks to balance, right? And it looks for liquidity. And you can tell by dropping this far, there's a lot of people that probably had buy limits. I know I did, and I got taken out, especially right through here, because I thought here was going to be an order block area as well. So I had my bet set on these guys right here with these order blocks, and that it would take off and go up. And why did I have that? It was just below. If we were to put this Fibonacci on here, it was just below that 61.8% mark. And so I thought it would hit these guys once it got down to around here, and then probably start moving up again. But instead, it decided to go lower. It took me out on my trade. I'm not gonna lie, it was on my core call. So if you're following me on core, I got taken out by that trade. But now I think it's safe to say that I think we're gonna start seeing some more growth out of Ethereum. If not, the worst possible thing that could happen is it could get all the way down to this weekly fair value gap. Now, I don't think it's going to get down to this weekly. It's possible, but I don't think it's going to get down to this weekly just because everything has been balanced up into that point. I mean, this is the lowest of the low. This is where we were back in July, whenever we had that really hard time from May up until July. before these charts started moving up again. So I don't think we're going to get back down to this level. I think we're probably at about the lowest that we're going to get. If anything, we could come down and maybe touch the breaker again. And that's about it. And the only reason I say that is because that is where the last bullish order block is. So if we were to actually hone in on this bullish order block and then throw a fib on that and look at the halfway point, and when I do Fibonacci's on these bullish order blocks, I do the bodies because the wicks won't give you much information. And looks like I may already have this green line. Well, yeah, we'll just use this green line. I think that's more of an hourly order block is what I had. No, 4-hour order block. So there's a 4-hour order block almost about halfway through that, which would be close enough for me to be watching that line to see if we're actually going to hit that or not, and see if it's going to come back down into this area. So it could be doing that same thing to where it's going to kind of stick around here for a day, and then tomorrow it drops again. And then if it does, this is where I would expect it to go, would be to this point right here, which was 28.71. Again, that's extremely low for Ethereum. But then again, we're just in the beginning of the year. So like I said many times before in my other videos, whenever we were starting to see all this stuff start happening, early December, and it was looking good. I said we could see all this stuff take months to play out before we start seeing some bullishness again. And I wasn't wrong. I mean, so far I wasn't wrong. I thought we'd start continue to see some bearishness, at least in the beginning of the year. Just because smart money knows what it's doing. The people that have all the money that can control these charts, they know what they're doing whenever they start pushing these things up, and then people think everything's going well, they start buying along with it, then all of a sudden, boom, they'll drop it out of nowhere. They don't drop it out of nowhere. They use part of the algorithm, like a bearish order block that I have here. So if we drop down to like maybe, I think, let's see if that was in a 4-hour or an hourly or something like that. Oh no, there's a 4-hour. Looks like it was more like in the hourly. Yeah, so here you can see the last up candle before the down candle drops and closes below that up candle. So that brings your bearish order block. That looks what happens. Comes up to it, gets close, doesn't get it. Next time it comes up to it, touches it, boom, drops again. Drops back into this fair value gap. Tries to come back out of it. Anytime it comes up to it, hits the bearish order block. It still cannot get above this liquidity line here. So there's a lot of buy stops resting above this, meaning that people are trying to buy this as a breakaway. So I think as soon as they get above this, it's going to pull back down, touch this as support, and then take off. So there's a lot of buy stops resting above this whole area right here. So that is the good news. The good news is that it probably will come back and attack this area. And in fact, I would like to put like some kind of an ellipses right through here. Just to show people, hey, watch out for this area in the future. This is probably where it is going to try to attack once it gets going back up again. And it looks like it is starting to go back up. So, but who knows? Like I said, what this did right here, this low, we already have another low, high, lower low situation, which means we have another breaker situation. So You draw this trend line out through here. And yeah, it looks like I got close enough. It didn't necessarily have to touch it, but it got close enough to where it said, okay, this is the this right here is the resistance area. So me put some coordinates on this, so it's at 3,300 exactly is where exactly that landed, and that's interesting. So again, I want to watch and see how this is going to play out. What I think will probably happen is it will probably almost curve back over this way, right? It may land on top of here. As long as this can close, and we're on the 1 hour. If this can close above this red candle, I think we're in the good. Because so far I haven't seen really anything kind of close above, a really good spot so far. All the closes have been lower and lower and lower. And whenever it tries to pull up, it doesn't get higher, and there's no close above that. So, like I said, if this 1 hour and we're at 2:30 a.m. Central Time, so we got about 30 more minutes to see how this is going to close. If it closes below that, it's still possible. We still have another hour that it could try to come up and close above that. If it does, we'd have 3 consecutive candles coming up, closing above finally your last down red candle. And then that way, with the next time it comes back downtown to that red candle, you should see that be your bullish order block. And then it turn around and start moving up from there. So I'm going to attach that here, push this over. And we will try to make these the same. And I'm going to make these green as well. And put the text plus OB. So I know it is a positive order block. And this, I'm just going to put breaker. Oh, if it would give me a capital B. There we go. All right. So we have a breaker here and a positive order block. So it could hit this breaker, come down to this positive order block, and then also move up against this breaker. Now, what's interesting about this breaker is that I can see it. It's also in between this 1 hour fair value gap. So you can see the fair value gap from this candle to this candle. So, which means it's going to have some tough times trying to fight through that. Or it could fly through it, one or the other. That's the one thing with fair value gaps. And it probably reached up into here, pulled back down, and then the next time it's probably going to shoot right up past it is what we're hoping for. And what we want to hope for is that once it shoots up past it, probably could come back down, get about halfway through to where this breaker is, right, and then continue on. That's what I would like to see. If not, if it's just going to hit this breaker, pull down, and then maybe pull up just a little bit more, but not close above this red candle, then we could continue to see it fall down, possibly to the bottom of this fair value gap. And then where I have these two, I have a 4 hour order block and 1 hourly order block. So if we go back over here, you can see where the last down red candles are. So yeah, 4 hour candle, last down candles here, 1 hour last red candles here. So it could come down and hit these, right? and then continue up. And that's why I say I don't think it's going to come back down to this breaker here. So that's what I would be looking for in Ethereum, to see what's going to happen. See if it's going to try to shoot through this fair value gap, come back down, hit this breaker, move on. Or it could come up, hit this breaker, come down, hit this order block, and then shoot up and move on. Or if it doesn't do either and it closes below this red candle, watch for it to sink to the bottom of this fair value gap, hit these order blocks, and then finally move on. So that's what I'm looking for in Ethereum. Bitcoin. All right, Bitcoin's a little bit of a different monster. What we had noticed in Bitcoin is that we do have a daily order block here, right? And we are still in the fair value gap from May for some reason. So that fair value gap that it made in between April and June, drag it all the way across, we are in that still, and it's actually went to the very bottom of it. But in the daily, you have this daily bullish order block right here. It's gotten all the way down to the bottom of it, and it's starting to pull up. Right now, the monthly order block here, which is what this green outline is, that is the September. That is the September red candle. All right, so from here to here was basically all it was. September's down motion. It didn't. There was a little bit of a tail, but still, that whole block would be considered the monthly order block. So now that we are in a monthly order block, and looking at here, we're in the daily order blocks within the monthly order block. We should start seeing some positive direction coming out of Bitcoin as well. And that's what I'm looking for. And it looks like it is working. It did, remember the spike below back in early December. It looks like it went below the sell side liquidity of that, which I think was probably the turning point whenever it got below that, because everybody was thinking that was going to be support. Once it drops down to here, everybody's like, oh, that's a support level. I didn't think it was going to be the support level. I thought it was going to be, a sell side liquidity level, which means it was going to break through it, and then take, people would probably have short stop losses, and then take out those short stop losses, take their money, and then smart money would start moving up again. And if we were to throw a fib on this would probably be somewhere around like almost the 90% level. It wouldn't, maybe the 88.6 if we were lucky, even below the 88.6. So then again, we are these two last down red candles, we are in the bottom of the last red candle. So if we went to the 4 hour, let's see what we got going on in the 4 hour on those last red candles. I think I marked it here with these two green. Yep. I think this is the 4 hour and the 1 hour. So it drops in below those, but it doesn't get below the sell side liquidity here. You can see I marked that in orange to see if we would get below that. It didn't get below that. And as you can see, there is a lot of liquidity here, all at the same area. So I have a feeling we probably are going to drop below that, because it does look like this is a safe spot for there to be resistance, or support, and since it does look like a safe spot for support, it's probably going to drop through it really, really quickly. And then once it drops through it, boom, it'll take off. Because it's not going to hang around for long. It's going to do it really quick, just enough for smart money to put in a ton of orders and then rip off the people that have been buying right through here and putting short stop losses, you know, especially right at this level to where it's, you know, the sell side liquidity is to where all these lows are, almost meets this low, the sell side liquidity. And so a lot of people are probably going to be putting their short stop losses right here, and then it's going to drop right through all of that. There's going to be a ton of buys on the institutional level, and then after that, boom, it'll finally probably take off. That is my interpretation of this. And once it does that, I would wait for it. I would watch for it to get above here, hit the bottom of this daily fair value gap, pull back just a little bit into this consolidation area, and then boom, take off again until we get above. Look, you can see there's two equal highs right here. I can already tell you it's going to be looking to attack those highs. And those highs are resting somewhere around $52,000. So once it gets around $52,000, we are going to be looking at the bullish momentum again. And the area I'm talking about as far as breaking the sell side liquidity is somewhere around $40,683. Right? That's so I would probably put, I think I did put on my core app, what did I put as my entry level? 48,850 is what I put as my entry level for the Bitcoin. Or no, 40,850. So I gave it a little wiggle room. Gave it to about right around in here, just so it could get close to the bottom. That way I knew I could enter and it give it enough room for stop loss. So my stop loss is about close to 40,000. Or wait, 39,400, and then my take profit is 40,850. So 40,000. Right. Yeah, 40,850. So I think that's right about the top of. No, sorry. That was my entry level. Hello. 44,300. That is somewhere inside of this daily fair value gap. So I think it's going to drop into here. I give it enough room for a stop loss, and then I have it to where it's going to pull up inside this breaker before it pulls back. You know, that's going to be my take profit level. And then once it hits my take profit level and then it starts to pull back, I'll be looking for another entry, probably somewhere around in here where this little consolidation is happening, because that is also another breaker, another breaker situation, because you have a low, high, lower low situation. So wherever this high green candle is, move it over just a little bit more, pull it up so you guys can see it. And this is on the 4 hour, not the daily, but this guy right here. That's where I think it's going to shoot up. It's going to pull down through here. Like you can see it already pushed up and hit that breaker area, and now it's pulling back. I think it's going to pull back below here, shoot up through here, hit the 4 hour or hit the daily fair value gap, get about halfway through, maybe a little bit less, pull back, hit the breaker, and then boom, take off. So if I was to draw this out, it would look something like this. So pull down below here, right, to break that sell side liquidity, to take all the people's money. All right, and then boom, jump back up, pull up into this fair value gap, boom, and then pull back down to hit this breaker, and then start moving back up there. And as you can see, there is a huge area of just, I mean, to where it went sideways. So there's a lot of liquidity waiting around in this area right here. So it's definitely going to come up probably to at least about halfway into this area right here, which I think this is also, yeah, that's a daily fair value gap. So I would say at least up until about half of the daily fair value gap. Could pull down a little bit more. And then once it pulls down to the bottom of the daily fair value gap, then I would expect it to probably push up again. All right, next I'm going to take a look at is Matic. Matic is one I called on Tradingview, and so far it hasn't hit my stop loss, thank God. But I had 4 entries on this thing. I had entry 1, which is just below this sell side liquidity area, right? And then that was my first entry. Entry 2 was, I think if I had this on a 4-hour, that was going to be a breaker area. Yep. So the body of the last up candle before it pushes down. And then also in the 4 hours, you have the last down candle before your up candle, and then your real last down candle before your up candle. Well, it hit all four of those entrances, and it's also fell back into the 4th entrance as well. So I have quite a few positions in this, quite a lot of leverage, but I also did measure out my stop loss with the average true range. So average true range being this down here. And what I did is that whenever I entered, I took a look at that candle and I saw what the average true range was, and it said it was only 7 cents. So I added $1 to it. I added $1.07, I think, or no, I went to the nearest low. That's what it was. Went to the nearest low, added 7 cents to that, and then that became my stop loss. And so far, it hasn't hurt me. So as you can see here, you can see the average true range 7 cents. I went a little bit above. I put 7 cents 113. I probably should have went 7 cents 40 as it shows, but so far so good. So as you can see, boom, it got below this, then it hit the breaker, which is also the bullish order block in the 4 hour. That still did not push it up. This still thing was acting bearish. So then it hits, you can see the wick, the huge wick on this thing right here. So you can tell that this did have an effect on it. This red candle did have an effect on it because it reached all the way down to here before it pulled back up. But then once it did that, it fell again. So once it fell again, it hit the last down candle before your up candle on your 4-hour chart. Kind of consolidated, went back up, and then once it went back up, it got into this daily order block. Not daily, but 4 hour. It was probably a daily, actually. Let me look at the daily here. Actually, no, it wasn't a daily. It created a daily order block is what it did with that, but the 4-hour order block here looks like it just got up into it. Let me change the colors here. Let's get it going some gold. That way we can get some contrast here and see what colors we got going. So yeah, you can see it jumps up into the breaker here, not the breaker, but the fair value gap here, and then drops again. And it had some sell side liquidity, and so it breaks below that sell side liquidity, but it still hasn't broken this one. I don't think it's going to break this one. I think this was a huge run on liquidity to try to get anybody that was going long to take them out. And I think it did, and I think anybody right now is scared to go long because of this. They think it might actually go below this, but I think at this point, I think Matic is safe to say to go long. Two more I wanted to look at really quick. Let's see what time I got left. Not much time. I wanted to go over Solana and DOT if we can. So you want to hang out with me while I do Solana and DOT. Well, I don't have Solana in FTX mode. I have Solana in Coinbase. Solana has just been one of those ones that's just dropped out of nowhere. Again, taking out sell side liquidity here. So you can see it right here. Boom. All the way over to here. Kind of consolidated in that sell side liquidity area. And then here as well. Boom. Took out both of those. So now let me get rid of any kind of Fibonacci I have maybe going on in here. And I think right now it's safe to say Solana probably could be on the upswing. Because right now I'm looking at the 4-hour mark. At the 4-hour mark, what you usually do is look at the last low before you break a high. Right? So here's two highs right here. And then it pulled back and then took off. So I would usually be using this as the bottom of your Fibonacci, but we may have to look at the daily instead. But even then, you would probably have to use your average true range to make sure that you didn't, if you're going to be looking at this as an order block. And what you would do is you would take the bottom of this here and your average true range. Over here it said 13, I think. If you would have entered over here, I would have been looking at the higher point around here, around 15. So throwing in $15 below the 137, and you would definitely be in a safe spot. So you'd be somewhere around 102, or sorry, 150. I can't even think straight now. Right now, 112. Probably somewhere around 112 would be your stop loss, which is just below this low. I don't think it's going to get below this low, even though we do have. This is when Solana had its takeoff moment, but I think it's safe to say right here is a good area to where Solana is probably never going to cross again. And that's going to probably be somewhere between the $100 and $115 mark. So I think Solana now again is I don't think it's going to try to break below this and get below the sell side liquidity. If it does, watch out for that 115. But I still think I don't think it's going to get down to this little red guy down here, because that's what I look for. I always look for the last red candles before the green candles. But because there's too much of a wick here happening. If anything, it might get down to this one. It could possibly get down to 97, but I really don't think that's possible. That's just too much of a fall for Solana to have. So, don't think it's going to happen. I think right now we're in the clear. If anything, again, just maybe just a little bit further of a fall, down to like maybe 122 to 115, somewhere around in there. But more than likely, I doubt it. Um, Again, we have another, if we go to the 4 hour, we have another low, high, low situation. Here we go. Here's the low, high, low situation. And then we also have a daily fair value gap in here. So it could come up, hit the daily fair value gap, pull back, hit the breaker, and then take off again, just like we did with Bitcoin and Ethereum. So, and then last but not least, one of my favorites that I always like to look at, that helps me get a sense of the market, because I think Polkadot has a huge, huge influence on a lot of things. A lot of people building things on Polkadot, and it's doing the same thing. So here you can see its last down red candle before its up candle movement. It comes down, touches that area, and now you can see it's back on its way up. Again, we have another low, high, low situation, right? And then within that low, high, low situation on the 4 hour, if we go to the daily, we do have a fair value gap right here. So if we go back to the 4 hour, what I would be looking for is this to probably pop up. Let's see if I can do a path to it really quick. If anything, it could get as low as here, but I doubt it. I don't think it's going to pull that low to get below the sell side liquidity, but I doubt it. If anything, it's just going to go straight from here up to about probably right here where this red line is. Why? Because that's where the start of the 4 hour fair value gap starts. Pull back, come down into this green candle, this 4 hour green candle, because that is going to be your breaker, right? Pull back down into this area, maybe just the start of it, maybe even halfway through it, not for sure. And then boom, take off again. As you can see, there's an area of a lot of equal highs right through here that it's going to try to attack, because this says, hey, this tells the regular trader, your typical trader, hey, this is resistance right here, so it's probably going to come up here and then pull backwards. Well, it probably will come up here and pull backwards, but just for a little bit. But guess what? We have another low, high, lower low situation. So it could hit here, pull back, hit this breaker area, and then boom, take off again. And I think that's what's going to happen. So those breaker areas are what is going to be the biggest thing I would be watching for, is that area right there. And once it gets above that, this area right here. So, and let's outline those a little bit more of your greenish area, because I think that's where people are not going to be paying attention. But these are the areas that I think are going to be making the biggest impact on these charts. So, because these are your breakers, and a lot of people don't really understand what a breaker is. But when you have a low, high, lower low situation, and the last up candle, that is your candle to look for, because that candle is going to act as support. It's not going to be just because there's two areas like this. That's not support. As you can see, boom, it ran right through that. That's not support. It's going to be something like this, to where you have a low, high, low, and that last up candle, that is going to be your support. Same thing here, low, high, low. Your last up candle here, as soon as it breaks up through that and pulls back down into it, that is going to be your support. Boom, it's going to take off. So watch those two areas for dot, and that's where I think we're going to see some actual breakout for dot from here. I'd love to go over AVAX. Maybe we'll do that tomorrow. But as for now, that's all I got. And love you guys for always watching my stuff. Hopefully you learned something today new that you didn't learn before. And if you did, do that thing again that I told you to do last time. Subscribe, hit that like button, and to remember, I'd love you to always just keep your pants on, guys. Keep your pants on, okay? Keep your pants on.